Okay, here's my Monday morning quarterback analysis of SPY right now, and all the things that were going through my head trying to analyze the chart as well. Remember, I'm an intermediate here. I'm not by any means a pro, and there might be some things here that I am missing or context that I'm taking completely wrong, but this is kind of what I see going into this. So the backdrop of all of this is that we have this D1 chart and we have this giant bull rally happening in the last couple of days. Things are just going up and up and up and up and up. But there's signs that this is kind of a paper tiger, that it's not really going to go anywhere. And the big main one is this declining volume. If you take a look at that, the volume is going down as the chart is going up, which means it's not buyers. It's just a lack of sellers. You can see the on-balance volume as well going down. We're getting a full divergence there as well. And like Pete showed in the RDT subreddit, posted right before this morning, a repeat of February. I looked at the chart really quickly and I thought, oh, that's this chart. But it's not. It's from a couple months back. It's the exact same thing happening. On top of this, there's no real change in the economic climate. Like all of the inflation's the same, all the reports are the same, everything's kind of the same, the war is the same, it's all the same. So what's going to happen here? The potential of a big reversal in SmackDown is probably big. And as soon as it meets any sort of significant resistant point, that might be enough of a catalyst for a reversal. So that was always in the back of my mind. Another thing too was that once it broke that 50 SMA, it needed to retest, boom, again before it went up even further. And it didn't really have this high volume push, don't look back sort of situation. So we already knew that this trend was a little sketchy. We already knew that the way that things were going up was suspicious. So now we are right at the top of this big blue algo line that I have right here. And this line starts from this high volume candle all the way down, making a perfect flush down these candles right to there. And as you can see, we opened right up into it. So what you wanted to see out the gate was for this to break it, breach it, and then just punch through. You might even want to retest and then to go again. But look, it couldn't get over it. So we saw this rejection, but it was still more than halfway this big candle. And then we saw this really big drop, another attempt over, and then another big drop. So this whole time you need to be just sitting waiting because you knew that things could either get fully rejected or punched through and never look back. It wasn't really a little bit of a both situation. It was a very low probability environment. It was 50-50 going either way. And if you picked the wrong direction, things would be very bad. So after this big second rejection, you get these three stacked candles. Uh-oh. But now you know that for this to actually turn bearish, it's going to have to punch through a couple of support lines. And there are multiple trend lines coming up on this big giant trend. You have the first, the second, the third, and each one gets subsequently longer and bigger, which requires more bearishness and more selling to punch through. So we're looking at this first one right through here, and I'm looking at SPY all morning, and it takes until 11:30 for this thing to get broken. But once it does get broken, it really breaks. So the break of this first trend line implies that, okay, we're going to have a bearish day. It obviously doesn't have enough to punch through here, and the buyers are really nowhere to be found on the way up. As you can see, there's a lot of bounces, there's a lot of retracements, there's not a lot of volume on the way up. So we know that the buyers are in trouble right through here. So now we know we can take some shorts. So if you take some shorts through here, what you're waiting for now is how this is getting to the next line, and that can tell you some evidence about stuff. So the way that this got to the next line looked great out the gate, but then you saw all these bottoming tails, which made things a little bit suspicious, the first bounce. But because of the fact that it didn't break the halfway point of this, if this was on a higher time frame, one big long ass candle, it didn't break the halfway point of that. And in fact, most of the volume was right here at this doji. It didn't get a lot of volume through here. Look at how much smaller the volume is in this zone versus the drop. Okay, so those are some good tells. And then you get that follow through with the bang, bang, bang underneath that second trend line and this support line, which was this gap candle right here, this top. Okay, so that was actually some pretty significant support. It was a fairly strong uptrend line and it was the top of the gap line. Not as strong as an SMA, but it's strong. But the price action leading to it implied that you were probably going to be good. Now in hindsight, this is easier said than done because you're always afraid of things reversing on you all the time. But the way this thing punched down to here, you probably could have been safe with your shorts. And you maybe even had an opportunity to add to your short. But because of the way things have been recently. If you were in your shorts and you saw this happen through here, and then you saw this green candle happen through here, you might want to take profits, and that would be completely reasonable as well. So we get another leg down. If you compare this leg down to this leg down, there's not as much bearishness in the price action here. You've got, once again, some bottoming candles. You've got a couple of engulfing candles through here. There's a little bit more fight back. There's a little bit more overlap. There's a little bit more green candles overall on this. So what you're saying is this is the second leg, and then you might be able to take some more shorts, etc., but you probably won't be able to add to them, especially because we get down to this big, giant uptrend line. And that's the big one. That's the one that starts all the way down at the bottom. And at that line, we break it, but not really convictiously. And then the fight back is really testing this as support. We're like warbling around it. As soon as it breaks the whole downtrend line for the day, that's when you know the potential of a short cover, or the length of this rest period is starting to tell you that there could be a short cover coming in. So you probably want to take profits on your shorts. And to be honest, depending on how aggressive you are, you might want to consider lining up some longs. So right around through here, we want to see how strong this short cover is going to be. And you get this big green candle, that's the short cover essentially, and you want to see if there's any follow through. But there really wasn't much follow through. And because there wasn't much follow through, if you took a long, you probably don't want to stay at too longer. So that's kind of my analysis of how SPY went down based on the price action, the levels, the context, etc. It's easier said than done after the fact. But if you can start by doing this after the fact, you can start to see these types of things unfolding as you're watching the market. And then you can start to decide whether or not to go long or short, when to trade, when not to trade, when to add, when to take profits, etc. But this day was a lot tougher than people think. Even though it was a bear trend day, the way that it had to get from top to bottom involved a lot of junctures right here, right here, right here, that left you second guessing and questioning whether or not you should stay in your shorts. So not as easy as people think, but hopefully that kind of helps you understand how to read the market real time and how to read the market in general. Like I said, this is my best guess, and do your own research.